Hi, this is Steve Davis over at Total Wealth Academy, and this is Misconception Monday. The misconception that I'm hearing is that real estate is as risky as the stock market, gold, or crypto. That is not accurate at all. It's not even close. In fact, if you think about what banks do with your money, what insurance companies do with your money, a lot of people think, well, when I put my money in the bank, they put it in a vault. When I send my money to an insurance company, I pay my premium, they put it in a big vault for safekeeping. Absolutely not. Do you know what they do with it? They go out and buy real estate. Not stocks, not metal, not crypto. They're too risky. The reason they buy real estate is because it is the lowest risk and offers the highest rate of return. When you look at stocks, gold, silver, crypto, those are high risk. The reason is they only make money one way. That's appreciation. When they lose, you lose. In real estate, we make money four ways: cash flow, equity capture, appreciation, just like speculating, and principal paydown. Let's say you're making $20,000 a month off of your real estate, and the market crashes, and your property values go down 20, 30, 40%. Do you care? No. You're still making $20,000 a month in cash flow. Real estate is way less risky for multiple reasons. I'll save that for my Saturday class, but there are multiple reasons why it's less risky. Real estate is also very, very forgiving. When you make a mistake, you can go solve it and change the trajectory of the investment. When Elon Musk makes a mistake, what can you do? Nothing. See, real estate is incredibly less risky than the stock market, metals, or crypto. That's Misconception Monday. Thanks for watching.